Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having an amazing day. We're going to take a quick look at Selfkey, and just before we do, we peek over at Bitcoin first, see what's going on. I think it's really important as a trader to understand what Bitcoin is doing. So just keep this in mind really quick, really simple. Last 3 days have been green. We've seen the price kind of bounce off of 56,000 to trend back upwards closer to 60. Now 60,000 is a major resistance level, so just bear that in mind. 58,000 apparently is a new support. So we're probably going to see a channel of 58 to 60 for a little while. My speculation is Monday/Tuesday, we're going to see either a sharp increase or a sharp decrease from the whales, just based on the fact that they're, well, either A, going to take profits over the weekend, considering the amount of volume that the price had increased over the weekend, because that's, again, consumers like you and I are driving the price up this weekend, right? But during the weekdays, the market is essentially manipulated, for lack of better terms, by the whales. That's why it's important to understand what they're doing in order to kind of help follow along, right? Simply put, we don't know what they're going to do tomorrow, but for right now, we can see that the price is fairly consistent on its way up throughout the weekend. So that's pretty normal. A lot of people are trying to get in before they can't, with this last little wave. So just bear that in mind. That's where Bitcoin's at right now. So all in all, it's close to 60,000. Now, taking a quick look at Key, just before we do, actually, I forgot to mention this. Not a financial advisor, right? I'm here for educational purposes, but my goal is to help you become a better trader, right? I love teaching people how to trade and become better. I've been trading for over 15 years myself. I've become very successful with it. It's my day job, and I can tell you it's definitely something it's very tangible. It's doable. You just got to steel yourself and use, good fundamentals, good risk tolerance, because that defines a good trader is risk tolerance. You're basically gambling if you have no risk tolerance, right? So I'll explain what I mean by that throughout my videos. So just keep watching the videos, learn as much as you can. If you want to leg up, perhaps you want to, hands-on, more direct experience, I have a trading community, link in the description below for that. I share every single trade that I take with my members. So it's a really cool experience. You can kind of get the feel for what that's like and follow along if you'd like. We got a one-click follow option through Telegram with Cornix. Now, looking here at Selfkey at the one-day chart, let's go ahead and just note some obvious indicators here, right? Because even though the price went up pretty significant here today, it did not break its all-time high, nor did it break its all-time high one-day close. So why don't we go ahead and mark those really quick first and work our way down, okay? So obviously the major resistance level is about 3.4. We've got a secondary major resistance level right about 2.68. Did I say that correct? Yeah, 2.68. You could pretty much say 2.7. And this is basically a resistance channel, right? Because again, it's the channel is created by the all-time high and the one-day candlestick close, right? Because the one-day candlestick close is probably the more effective support or resistance level, but the all-time high is also equally as important. So just note that those are two important ones. We got to bridge that gap before we see a true breakout, but this is a pretty strong start, right? And taking a look at the moving averages, well, we had the golden cross recently that really didn't do much at all. That's kind of just it's fairly insignificant unless it's Bitcoin, right? Typically, Bitcoin golden crosses are bigger than that. So, for lack of better terms, that doesn't matter too much. But the bottom line, prices above both moving averages. That's excellent news. Those are essential support levels. We've got the RSI blasting through 70 and on its way back down. Pretty standard for a price increase like this that retraces as it has so far. So I wouldn't be surprised the price consolidates out a little bit further. But the bottom line is if we can keep the RSI up over 70 on the one-day chart, that would be beneficial to allow the continuation of the upside. If it drops below 70, not a bad thing. It just basically means that we'll probably have somewhat of a resistance level, likely somewhere in the range about 2.25, right there where the price, the one-day candlestick is closing. So looking at the 4-hour chart, we can kind of see what's going on here. Price is still above moving averages, obviously, because it ramped up. This is right where I'm talking about before. So what I mean by this is that I have an RSI video that kind of explains what RSI does, right? And how to properly navigate that. When the RSI comes down under 70, that's the case in point where you typically want to try to trim your position or sell because you're going to get more profit than if you do when the price just comes up over 70. So you've probably heard the term, RSI over 70, consider it overbought. It's a time to sell. That's the general concept, yes, but you don't just sell as soon as it passes 70 because you're going to miss out on a lot of opportunity. Okay, so be patient. That's where patience comes into play. It can be difficult to be patient when you got these 4-hour candlesticks slowly forming, and it might take a full 12 to 24 hours to come to fruition, right? So just be patient. I know it's really easier said than done, but that's probably one of the key factors that you can have, key qualities as a trader that really helps you understand. I'm extremely patient, in some cases almost too patient, where I will miss out on some opportunities. I'm not going to lie. But that patience leads to an 85% conversion rate, and I have no problem with that, okay? Because I'm always profitable. There's so much money to be made that it's like every single corner you turn, you're going to miss opportunity. That's just the way it goes. You're never going to find the highest high or the lowest low. You're going to find somewhere in between, and the key is to identify what direction it's heading, follow the trend. The trend is your friend, okay? Right now, the trend is kind of down, obviously, in the last 12 hours because it peaked really hard, really fast. So let's see what that was, right? 130% in 4 candlesticks, right? So 16 hours, 100 and some odd percent, right? 130% as a round number. That's a lot of movement, right? That's too much, too fast, too quick, has to come back down. It's rare for prices to stay that high, unless, of course, they're like ICO dates or there's rare one-offs, but simply put, we're overextended essentially at this point. We're going to look at the 1 hour chart to identify this is really going to help us the most, because I really, truly feel like the 1 hour chart is the most effective way to understand these smaller time frame movements. 15-minute chart is also good, but 1 hour I think is the best because there's some really cool tools we can use here. First of all, we got the Ichimoku cloud. So here's a key takeaway here. We're above the cloud, all is well and good, right? Our conversion line, this blue line up here, is above the baseline. That's also good, right? That is essentially implies that we're still bullish. However, we got this lagging span, this little green guy over here, right? Referred to as a lagging span. This guy, once he intersects with the price action, which he's going to do in roughly 1 hour's time, tells us that we want to go ahead and exit our position. That's just the safe way to go. Doesn't mean you have to do that. Doesn't mean that it's going to come crashing down. It just implies that that would be a safe exit point if you want to stay conservative. I prefer to stay conservative, so I'd probably either exit my position or trim my position at this point in time. But it doesn't necessarily mean it's not gonna it's gonna keep going lower. It could very well go higher. We don't know yet, but that's the safe way that Ichimoku Cloud helps you identify good entry points and exit points. So that's awesome there. But bottom line here is we're above the cloud, right? And the key takeaway here is that if the price were to continue to go sideways, the cloud has a tendency of working as a support level. Okay, so we should at least give it that opportunity. Heaven forbid the price comes down a little bit lower, give you a better buying opportunity. If it bounces off of the cloud, then we're in good shape. Okay. We're also going to look at Fibonacci retracement lines here too to kind of identify where that matches up, because a lot of times support and resistance levels match with the Ichimoku cloud, and that reaffirms it as a support or resistance. Okay. Excuse me. So let's go ahead and take a look at, first of all, let's look at TD sequential. We've probably got some resets here, of course. So if you see back here, we got from a 1 to a 7, consolidate, retrace down to a 4, then back up to another 4, and we've got a bunch of resets. So we're basically in a state of consolidation where the price is jumping up, jumping down, trying to figure itself out. That's basically the bulls saying, hey, I want to push the price up. And the bears are like, no, we're going to take our profits. And it keeps going back and forth. It's kind of like an epic battle between bulls and bears, right? I like to look at it that way. And they're just fighting their asses off right now. And that's pretty much what's going on. But it's going to level out. One of them is going to take over, right? One's going to win. So we got to identify that. And obviously with the momentum here, we can't really tell that there's much exhaustion. It's consolidating, right? So consolidation is good. That actually is a very good thing. So we want to see the price keep going sideways before it legs up again. The likelihood of it going sideways and legging up is much higher than it going sideways and legging down, right? Because it should have come down by now if it was going to. So just keep that in mind. There's some really good key, no pun intended, there's some good key indicators here that are helping us understand that key is on the right track. So I see much more bullish than bearish indications here. So let me just go ahead and identify really quick here. According to this guy here, this wonderful Fibonacci retracement, let's see what's going on. So we can see a pretty key level support. I gotta stop saying key level here because that's gonna throw you off, throwing me off. Anyways, we got a strong support level here right about, what is it, 1.9 cents? Is that right? Yeah, sorry, it's hard to see that. I gotta increase my sizes here. So 1.9 cents is essentially a strong support level, right? We could round up, maybe even say 2 cents. And then of course right here at about 2.5, is that right? No, sorry, 2.05 cents is another support level. So you can see it's kind of tested that 1, 2, 3, 4, 5. Now it's testing it a 6th time. Okay, so I'd say that's an important indication there. If the price were to stay above that level for, let's say, the next 8 to 12 hours, then we're going to be in pretty good shape to be able to consider that a support level, and then we can maybe consider adding to our position, right? But key takeaway here is that it's kind of premature to identify how much more movement we're going to see, right? But what I can tell you is right now, based on where we're at, it's really healthy in the sense that it's consolidating closer to the higher side than the lower side. And that tells me we're going to probably see a more likelihood of breakout to the upside than a downside. Okay. Because oftentimes, and again, this is premature, but just say we have this little wedge pattern form, right? Say it continues to work itself through here, or even right through here. The likelihood of it breaking up is much higher than it breaking down because we came up and we're effectively working ourselves into this pattern, right? Now, if it was coming down, on the inverse, right? Say if it was coming down, then we'd expect to break out to the downside because that's how the different patterns kind of work essentially. So long story short here, there's a lot of good key indications here that the price is going to probably continue to increase. So it wouldn't be terrible to consider adding to your position anywhere between 1.9 cents and 2.05 cents. So, again, really good stuff here from Key. I think we're going to see a breakout to the upside here soon. But just note, if we were to break out to the upside, okay, this resistance level, the case in point, the place in which the price resisted out here today, recently, that was actually, correction, last night, right, around 11 o'clock. It maxed out at about 2.65. That's a key level resistance zone from before. That's where the one-day candlestick closed and couldn't close any higher. So in order to get above that, we need to be able to break these resistance levels. We need to close the one-day candlestick above that level, right? That's important. Once we get the one-day candlestick close above 2.65, then we can set our sights on the next major resistance level, the previous all-time high of 3.48, right? So we'll keep a close eye on this here soon. I'll try to evaluate this once every day or every other day if possible, so we can understand kind of what the potential is. But big picture, just keep this in mind. We break that resistance channel, it's very likely to see 4.1 cents in the next 2 to 4 weeks. I think that's very realistic. And again, I say 2 to 4 weeks to be conservative, right? Because if you look at this here, I mean, shoot, we're looking at one trading day. We've already made a significant 125, almost 130% increase, right? We're going to have that same amount of travel in the next 2 days. You bet your butt we need to see a little bit more consolidation first, right? That's just the way that it should work. Again, crypto moves different than the way that things go, and that's just kind of how it works. But I just want you to walk away here understanding that 4.1 cents is a very strong likelihood. Will it happen in the 24 hours? Maybe, but probably not. We're going to want to see the price go sideways a little bit further, consolidate, because we got 2 major resistance levels, right? We got to break that plane first. All right, so just so you know, that's kind of what we're at. So hopefully you found benefit here today, and this didn't provide more questions than answers. I'm sorry if so, but I think we're going to see a breakout to the upside here soon. Continue to add to your position. That's what I would be doing, right around 1.9 cents, in between 1.9 and 2.1. And we'll go ahead and kind of go from there, okay? So I hope that works out well for you, and you have a great rest of your day. Thanks again for your time. I look forward to seeing the next video, and if you're not currently a patron, consider subscribing. I think you'd benefit greatly from that. Month end, prices increase as well, just so you know you can lock in your rates in November. So I appreciate your time. Thanks again. Have a great rest of your day. We'll see you in the next one. Take care.